I'd like to talk about 3 tax advantages that a limited company has over a sole trader or partnership. Firstly, I want to talk about flexibility. When you are a sole trader, if you earn the money, you pay tax on it. If you operate through your own limited company, you earn the money, your company pays tax on it, but you only pay tax on your dividends if you take those dividends out of the company. And by restricting what money you take out of the company, you can avoid hitting the high rates of tax. So if you say you made sure your taxable income that you took out never exceeded 50,000, you never go into high rate tax. But with a sole trader, if you earn, if your business makes 60 grand, you've got 10 grand in high rate tax that you can't do anything about. And if you're in a business where his income fluctuates year on year, you'll pay high tax in the good years in a sole trader, whereas if you have a company, you can keep the tax in the good years, keep the income in the good years, take it out in the bad years, smooth out your income tax on dividends, and you'll end up being a lot better off. So that flexibility isn't there with a sole trader or partnership. The second advantage is you can split your income if you have a company with your spouse, your other half, by giving shares to your wife or husband, you can equalise your respective incomes, and again avoid going to the high rates of tax. With a sole trader, it's all on you. So if you're going to hit the high rate taxes. If you're a partnership, technically your wife might be a partner or your husband might be a partner, but you're supposed to earn money in a partnership rather than just be allocated it. So you're supposed to play a part or have a reason to have the money, and also you are supposed to plan in advance what your partnership income split would be, but you won't necessarily know what income the partnership's made until after the event. With a company, there are similarities in that you're supposed to vote dividends, but you can see what dividends you take as you go along without having to look back what profit a company made. So that ability to split income with a spouse is a big part of tax planning for many small businesses, small companies. And the third thing I want to talk about is national insurance. It used to be quite an advantage if you're a company because you didn't pay national insurance on your dividends, and a sole trader pays national insurance depending on the tax year, maybe at 9%. At the moment, we're in a stage where it's 10.25%, expected to go down to 9%. But dividend tax that got introduced a few years ago has closed that gap. Rises in corporation tax have basically made a company less tax efficient if its profit is more than £50,000 a year. And so the national insurance question is probably much less of an advantage than it used to be. There's probably quite neutral, but I still believe that the flexibility and the ability to split income with a spouse as and when, in a proportion that suits your family, are still key advantages.